Hi, my name's Randy Smallwood, and I'm President and CEO of Wheaton Precious Metals. We are at a very exciting stage in our company. We've just started off a pretty aggressive growth campaign, and over the next 4 to 5 years, we'll be increasing production by pretty close to 50%, and that's not counting anything else we add on. We're very busy at looking at new opportunities, and so there's never been a better time to own more Wheaton.
Good man. Good job done. Go now. Off you go. Good to see you back in London again.
Yes.
So soon.
Always a pleasure.
And I'm now an honest man, married man. Well done. Congratulations. As I last saw you.
Yes, thank you.
Right. You're part of this kind of Canadian symposium, amongst other things, this week. How's it going over there?
Good. Actually, I was pretty happy with the crowd. Northern Miner Canadian Mining Symposium, and a pretty good crowd. And so, yeah, I was honored enough to be invited to be a keynote for the afternoon, and had really good crowd engagement too. So, pretty happy with it.
Yeah, I hear Mr. Friedland got caught short. His jet was not up to scratch.
Yeah, I haven't heard. I heard he wasn't there. I didn't know why.
Okay, so. I think not enough champagne in the fridge or something like that. Probably. Now, you were a keynote. So, what are the big topics that you wanted to talk to people about?
Yeah.
Let's start with a little bit of that before we get into Wheaton.
Sure. Because that's it was much more general. It was more about the gold market itself as a whole, right? And so I've just finished off in September. I finally handed over the reins as chair of the World Gold Council. So I spent 3 years there. But it's been an incredibly exciting 3 years, and I think we've sort of re-energized and reinvigorated the World Gold Council as the advocacy group for gold in terms of pushing forward on a number of different fronts. First off, on the education side and just getting knowledge out there about what gold delivers to society, but also modernizing how we trade gold, how we own gold. And so, spent quite a bit of time talking about a new initiative, the World Gold Council. It's not new. We've been working at it for a while, but it's an initiative in terms of digitalizing how we trade gold and how we move gold around so that you can get to the point of instant settlement. You have confidence behind your tokens or your digital tokens that there's the physical gold. Through blockchain, all of this technology is available, and so we're working our way forward through this process and making good progress with what we call we've got our own version of the G20, which is it's a number of different players in the bullion space that need to be involved in this, from regulators to the trading banks, the bullion banks, the vaulting companies, the LBMA, the regulatory agencies, and of course the World Gold Council leading this, pushing forward. And so our ultimate objective is to have a not-for-profit driven system here that is intended to digitalize the way we own gold. So the gold doesn't have to move anymore. You can actually just assign tokens. You can have through blockchain, correlate it back to a physical address. You know where your gold is that backs it. You have good provenance behind it. We've got a program called Gold Bar Integrity Program that all of the members of the World Gold Council are now, as of September, we've all committed that all gold we produce is now being registered within this blockchain, and as it gets delivered to the refineries, it'll allow the refineries to have good provenance records about where that gold has come from to go into finished bars as it goes out. And so just progress on so many fronts. Okay.
And so something like that, that's a big goal. That's an ambitious goal. You mentioned regulators in there, so it's good to have them in the conversation.
Yeah.
Because at some point, things like that, usually governments do like to interfere, do like to have sort of financial benefit of and maybe take control of. It's an ambitious move. When you talk about some of these part of the G, I guess the G in the G20 stands for gold, does it?
Yes.
We got good. How do you ensure this sort of impartiality, this kind of global ambition?
Well, that's why it's gold. Gold is very liquid. It's accepted everywhere. It can't be owned and controlled or steered by any one entity because there's other gold out there. And so that's the beauty of gold, is that it is apolitical. It doesn't have that. It's not subject to political influence. Now, obviously, market conditions are always subject to many different types of influences, stuff like that, and political events do impact it. But the fact that gold itself is resilient through that, it can't be manipulated, it can't be adjusted, it can't be steered. That's the huge advantage.
Until the point where you need to kind of liquidate it, presumably.
Yeah,
because I guess what's really interesting bit about that ambition is the kind of the fiat currency conversation that's been going on a while, especially in this climate.
Right.
You've got the fiat currencies, especially the US dollar, wanting to have huge influence over initiatives like this, blockchain initiatives, Bitcoin initiatives, et cetera, right?
Yeah.
So the point at which someone wants to liquidate their holding in physical gold, they need to go back into the system, don't they?
Of course, as you would if you want to liquidate your US dollars.
Right.
You have to go back into the system. So, and don't know where the question
is. I'm not well, it's kind of like Bitcoin is saying, well, you can't be a true Bitcoin person because, where Bitcoin is saying, well, we can actually go in there and start physically buying stuff with Bitcoin. They've tried to get, like, you look at El Salvador and places like that where they kind of introduce it as a currency.
Hasn't gone too well for them, but...
but it's sustained, It hasn't gone too well in some ways, but in other ways, it's still there and people can transact.
I'm gonna hypothesize that I would have way more success buying something with gold coins right now anywhere in the world than I would with Bitcoin anymore.
Okay. I don't disagree with you about that.
Yeah, exactly. It's two totally different scale of markets there.
Right.
Bitcoin is the Wild West. It just doesn't have that credibility, that store of value, that solid nature to it. So what we have seen though is that, in reality, the way we own gold hasn't really changed in the last 50, 100 years.
Yeah.
The ETF was created about 20 plus years ago, which did, in a sense, allow you to digitally own gold by investing into an ETF. And of course, it gets audited so that it's allocated. Certain of the ETFs, you have high confidence levels. But it's time to go to the next step. It's time to, as we call it, Gold 247, it's time to get gold to the point of where you can trade it 24 hours a day, 7 days a week. And the technology is there. We've seen the technology. We know it works. Now it's a matter of applying it, but we need to make sure that when it's done so that it's respected by the institutions and by the regulatory agencies. It needs to be done that way. Because trust is one of the key things. One of the best stories that I've heard of recent is Costco, big American retail firm, probably the most trusted name in retail space in terms of quality for good value. They've started selling gold on their online site. They don't sell it in their stores. They just sell it on their online site, and they can't keep gold in stock. They can't keep it. Every time they bring in new gold, it's gone within half an hour. Half an hour to an hour at most. They just can't keep it in stock. Why? Because there's a lack of trust about where else you can find gold, but with a company like Costco, so well respected, well trusted, the demand is there. And now what we need to do is create, and what we are at the World Gold Council doing is trying to create something that's at that level of trust, or a higher level of trust, so that investors, that mankind can have confidence in the fact that there's solid gold backing them.
Right. And I think people have, because it's because in catchphrase, it's a store of wealth, right? So gold is a store of wealth. What I'm trying to understand is the extent of the ambition towards it's also has its ability to transact.
It may ultimately become a currency. Where our objective is to, I don't want to take on the US dollar. I'm not here to destroy the US dollar.
Yeah.
But there's a reason why the crypto space has existed, because people are looking for something that is apolitical, that not subject to political influence. And that's what their hope is with the crypto space. Unfortunately, what they're missing is the amount of greed that's also in there, corrupting that space. When you have a good, solid a gold-backed system of digitalizing how you move a commodity around, you're right. It almost starts to look like a currency. And so, the long-term goal, if it gets widely accepted and taken to that, maybe you will be able to, when you slide your card into the credit card machine and you have a choice right now between, for me, Canadian dollars or British pounds, maybe one of the options will be in the future a standard gold unit. If I want to use gold to do that. I hope that we eventually get to that point.
Okay, gold-backed currency 2.0. Here we come. Right. We better get on to Wheaton thing. Before we do,
right.
You're hanging out with film stars now, obviously. So thanks for joining us. Thanks for making the time.
Well, it's
Just go tell everyone about this. This is quite a big deal.
So we released last night here in London. It was quite a party. I'm still sort of feeling the effects of it a little bit.
But, I'll speak slowly.
We released, had the release party for Gold, A Journey with Idris Elba. And Idris is an amazing actor. But I go back to us originally approaching him about coming in to talk about this. And what we're trying to do is, again, education, show people, in our eyes, I mean, obviously, it's the World Gold Council, but we're trying to provide a balanced view of what the gold mining industry does to society, for society, right? And so Idris tours the world, all the way from northern Canada to Peru to New Zealand to India to Ghana to South Africa, and spent a little bit of time here in the vaults in the Bank of England here in London. And learning about the gold industry itself, and concluding at the end, very with strong conviction about how he now understands why society needs gold and why society needs the gold mining industry in terms of delivering what it does to society. And it's a really well done. It's a short vignette. It's available on YouTube for free. You don't have to pay. There's no Netflix or anything like this. Again, encourage everyone, all the reviews, I haven't had a negative review out of it yet, and Idris is an amazing actor. And so I said the biggest challenge we have is I'm not sure how we're going to follow this one up, because it was so well done and a huge response last night. So it was really well done.
Good. And it's also on the Gold Council website, I think.
Yes,
as well. So go find that. Worth. You know what's interesting about it? So seeing someone who knew nothing about it. Mm-hmm. Go on that journey and just opening up to what it meant to different cultures, different people all around the world. It's kind of enduring in that sense.
It is, and it was interesting because I think Idris also learned a little bit more about himself and his own history. He's half Ghanaian and from Ghana, and his mum was from Ghana, mm-hmm. and so he went back to understand a bit more about the area that she was from and the impact that gold had for thousands of years in that area. And Idris, as I said, even learned a bit more about his own background, his own culture, his own roots, and then how important gold was in defining that.
Right.
It's a really well done. Encourage everyone to take the time. It's 65 minutes long, so it's take an hour to do it.
It felt quick, kind of.
Yeah.
Good time.
Oh yeah.
Good time to that.
Yeah.
Anyway, enough of that. But so what we're here to talk about. Wheaton. Do you remember them?
Yeah.
Wheaton.
They pay my salary.
We've got to talk about that. So, last week, kind of quarterback in June, I think it was. We kind of did a lot of background stuff. I don't want to go there.
Yeah.
But what I do want to talk about is this building. When you're a big company, we're a $19-20 billion company. You've got to keep talking that growth story, right? You've got to keep building. Now, you mentioned at the outset here, and certainly the opening monologue there, that this is coming up for a good year for you guys. It's kind of building up on the revenues, right?
So maybe multiple years, yeah.
Right.
Yeah.
Okay.
Yeah.
So
this is the start
where we are.
So last year was a bit of a challenging year for us, and I think we've hit our well, in fact, it's clear the evidence. Our first two quarters have already shown that we're climbing up out of. We had a bit of a low in production last year, but for the next 5 years, every quarter is going to be better than the last one. Every quarter, and we're going to grow cumulatively over 50. Well, we're just shy of 50% in the next 5 years, and this is not counting any new acquisitions, and we're very busy on that. Yeah, and so we're already, and you sit and think about this as a $20 billion plus or minus $20 billion company to have a 50% growth level in production. It's there's nothing that exists in the streaming and royalty space. Franco-Nevada, nowhere near that. Royal Gold, nowhere near that. The amount of growth that we have, we are going to take streaming to a whole new level in terms of the scale and size of what we're actually delivering to our investors, to our shareholders, and we're so busy. We just see so many further opportunities to do this, and so we're not going to stop there, but the next 5 years are incredibly exciting for us. And I think we're perfectly positioned to capitalize on what I think is going to be a good, strong market in precious metals, because not only with that increasing strength in precious metal pricing, we're going to have substantive growth all the way through this process. And it's not, there's no company of our scale that has a growth profile like we do over the next 5 years.
Right. It's probably worth it, because I always say it's hard to forget from me, there's a lot of people that here are sort of new to some of the terminology, okay, and that's important. So streaming, just explain how that works.
Sure. So streaming is, we supply capital to the mining industry. And we supply it by investing into assets for a portion of the metal that they produce. Now, typically, most of our streams actually come from copper mines. And so with the demand in copper around the world right now, that's very exciting for us because we see continued investment into those copper mines. More than half of our gold and silver comes from copper mines. And so these copper mines, they have a little bit of byproduct. They produce a little bit of gold, a little bit of silver. We approach the copper mining companies and we say, we'll give you a bunch of money up front. That's our upfront investment. That's our fixed capital cost. No surprises on the capital cost side. And you give us a percentage of whatever gold you produce while you're mining this copper. The gold comes out with the copper all the way through the process, goes all the way to the copper smelter. It only gets separated at the smelter, but we get a percentage of whatever gold comes out of that mine for the life of the mine, as long as the mine goes forward. We've had incredible success on the exploration side. We've essentially explored and found every ounce that we've ever mined. We've replaced it. So our reserve and resource base has not shrunk at all in terms of these mines exhausting themselves because we've had exploration success. And what we deliver to shareholders is a very low risk way to invest into some really good mines because our operating costs are fixed. When that gold gets delivered to us, we make a production payment on a per ounce basis. Our capital costs are fixed. So there's zero cost risk from which is very unusual in the mining space, in the resource space, because if there's one area that the mining industry has continuously failed is on cost promises. They continually over budget on either capital or operating costs are higher. Our costs are fixed. Our costs are predictable. Very high margin business. We're operating at about 75% operating margins right now. So
let's break that down for people again for the uninitiated here. So for every ounce you purchase, what do you pay?
We pay our average cost per ounce of gold right now is about $430 an ounce.
Right.
And so our profit is the difference between the spot price and $430 per ounce. Our company has only 40 employees, so G&A is not significant for us. So we don't have any hidden costs or anything that's chewing up on that. And actually, in particular, I'm really happy with on the dividend front. We actually pay more back to our shareholders in dividends on a per ounce basis substantially than any other company in the precious metal space. Over $400, an additional $400 goes back to our shareholders in the form of a dividend.
Right. So Q3 numbers about to come out. You got the call soon. When was it? November 9th or something like that, right? Okay. So let's talk about some of the headline numbers from Q2. So just people get a sense of the quantum.
Yeah. So our cash balance, our balance sheet is incredibly strong. We have zero debt, and we had over $800 million cash on hand at the end of Q2. We do have some commitments coming up in terms of funding construction going forward, but we are generating about $1 billion a year in cash flow right now, and that billion is going to climb as we grow. The 50% growth should push us up even higher than that, even if prices stay where they are right now. And so the production looks good. It was, again, a bump up in production over the previous quarter. As I said earlier, I really think there might be some volatility here, but really for the next 5 years, every quarter is going to be better than the previous quarter in terms of that. So I think we're set up quite well. Our flagship asset, the Salobo asset, is doing very well in terms of the third phase startup, but also building phase 1 and phase 2 back up to its original capacity, and so that's really helping us. And so we're shaping up for a pretty decent year.
Okay, so quarter after quarter growth is what you're telling us over the next 5 years. If you did nothing,
that's right, exactly. Right, that doesn't count.
That doesn't count.
New opportunities.
So let's talk about the ambition, the aggression there in terms of these opportunities that get put in front of you. The profile of a target that you're looking for looks like what on average?
Well, the most important thing for us is that it's got high operating margins. So the first criteria that we have to put any potential opportunity through is if this mine operates, where does it fit in the operating cost curves? And so if it's a copper mine, we want to make sure that it's an asset in the first and second quartile of the worldwide copper cost curve. We're not really interested in the higher cost assets. So that's typically the first.
Why is that? Explain what happens
because
there.
If our partners aren't profitable, we're not profitable. So we want to make sure they're profitable. And in fact, the more profitable they are, the more focused they are on making sure that they get the best value out of this mine. If they're getting good, strong returns out of this mine, they're going to continue. That's where they're going to spend their exploration dollars. That's where they're going to spend the expansion studies to see if they should grow production, ramp it forward. And so, the more profitable our partners are, the more profitable we are. And so by focusing on assets that have high operating margins for the operators, when they're producing their copper, we get the benefit of that continued reinvestment into these good, strong, profitable mines. And 93% of our current production comes from the bottom half of the respective cost curve. Again, to have a diversified portfolio that delivers that much metal and to have 93% of it in the bottom half, there's not a precious metals company that has, I think it's the highest quality portfolio in the mining space.
Right. Hard to find.
Mm-hmm. Yep.
A little bit of competition.
Diamonds
I know
in the
you're
rough.
the 800-pound gorilla in the room, but there's competition as well, right? So it's hard to find. So when you're looking around globally at the moment, it can be expensive if it's competitive. So you obviously want the best bang for your money, best return on your investment, right? So how do you go about securing a deal? Why should people pick you guys versus some of the people you mentioned?
So I always argue that's the most important difference between streaming and some of the traditional royalties that you see out there, or even royalties.
Is that the competition? Royalties only?
No. Because even the royalty companies are now streaming companies. They don't even do royalties because streams are just better. They're much more focused.
Yeah.
But a stream is a partnership. That's a key difference between a stream and a royalty. Is just a registration on land, send it the check, and no communication. Streams are partnerships, and so we constantly put focus on trying to help our partners be better. And one of the things that I'm most proud of is now for 10 years we have been co-contributing towards community support programs. And that means even though we don't operate the mines, we recognize that the communities and the neighbors around those mine sites, they're impacted by these sites. And so you want to make sure you're leaving some good sustainable benefits to these sites. And so we work with all of our partners to try and enhance their ability to deliver good, positive benefits, sustainable benefits to the local communities itself. And I'm proud of that track record because we kicked it off. We started that 10 years ago, and now every company in the streaming and royalty space, whenever they're signing a new deal, there's always a component of how much are you going to contribute to the communities. And that is something that we as an entire industry need to do a better job of, is making sure that people understand that there is good, strong, sustainable benefits for the communities. And so we become a partner of choice, and people like having us as a partner. We have a good, strong, when I look back at the last 13 transactions we've done, 9 of them are with either people or companies that we've dealt with in the past. Those are repeat customers. Why? Because they like working with Wheaton. We really put a lot of effort into trying to deliver a different product, to be supportive, and to find ways to add value beyond the upfront payment, and continually supportive, right?
Can people put a dollar number on that, or in terms of that type of help?
Well, I mean, here's the best example. We've seen a lot of political unrest in Peru over the last couple of years, and there's only 2 mines in all of Peru that have never had any substantive roadblocks or challenges with the local communities, and those are the 2 mines that we have streams on.
Okay.
So I'm not going to take credit for that because we're not the ones that are running those social license programs with the local communities. But what I can tell you is that those 2 partners of ours in Peru, 2 totally different operations, they both have had good success and good, strong support from their local communities, and I know we're helping. And that's the key thing. And so that's there. That in itself is a good enough measure of why we do it.
Okay. So you aim for companies in the bottom half, not quarter.
Yeah. Oh, we really like bottom quartile.
Yeah,
we'll take quartile.
Bottom decile. I hate that. No, so that's right. Are there companies that fall outside of that, but with your capital, they can change that, the economics around that, whatever it is they're trying to do? Or do you need them to be already there?
Yeah, no, we put bids in on everything, but we risk rate it. So if it's a 3rd quartile asset, then we increase the risk profile, which means increasing the discount, which means our capital becomes more expensive.
Yeah.
If it's 4th quartile, we really increase the cost of our capital. We kind of put, if we think it's going to be a mine, we'll put a bid in.
Right.
But we're just not ultra competitive. So we'll leave the 3rd and 4th quartile stuff for our peers. And that's typically what we've seen, is that you go and look at even the bigger peers beside us. If you look at the distribution of their quality, it's nowhere near as high quality as ours.
So you're leaving the kind of operational decision making to them. So you help. I get the social license stuff that, and there you can put a dollar number thing on that, I guess.
Right.
But in terms of the operational component, you guys, as part of your evaluation, you can say, well, you guys are good, but ultimately I'm looking for bottom half cost companies.
Yeah.
We're not going to come in here and advise you how to be better miners. Is there some part of it?
Well, we're always happy to share advice, but
Right.
but in the end, the operators have to operate.
Sure.
They're the ones that have the ultimate responsibility to that. That's one of the beauties of streaming, is that we're not in there telling them how to do things.
Yeah.
But if we see ways to improve, we'll share that. We
Right.
visit every asset at least once a year, quite often, more often than that. And you know, one of the reasons we do that, because we do see a lot. So we see a lot of best practices. We see a lot in worst practices.
Because you're in those data rooms as well, aren't you? You're seeing the real data.
Yeah.
Right. Okay.
Oh yeah, no. So and not only that, we also get to look at a lot of new opportunities where we decide not to invest into, but we have a look at what's going on there, and there's ultimately reasons why we don't. And so we do get a lot, because we get that nice broad exposure. It's important for us to share that experience and that knowledge with our partners.
Yeah, I guess that comp set of yours is more extensive than they could possibly have with their experience,
no doubt,
right?
No doubt.
Okay, correct. That's interesting.
Yeah.
And do you have people like managing that kind of data analysis? That's kind of interesting to me.
No, we have an operations team that is responsible for overseeing all of our existing contracts, and they focus on visiting on a regular basis and sort of getting updates. Also measuring the success and understanding what our contributions are in terms of community support programs and stuff like that. And so we have a full team.
What do you like to say? This isn't for your company. This is for companies' CEOs looking in and listening to this conversation, going, what do I need to look like to be able to kind of qualify and attract someone like a Wheaton much further down the line? How do they need to behave? What was the data that needs to be get? What's important?
The first thing is, just build a solid project plan, your feasibility study. Make sure you've got good solid data behind it. We are pretty critical in terms of going through and looking at the projects itself, and so focus on answering those questions. It's hopefully you've got a project that can carry those operating margins that fits into that. We'll say there's a lot of tougher projects out there that are waiting for a higher commodity price sometime in the future before they move forward. And so for us, one of the other aspects is the whole community relations side, the whole social license side has moved a lot earlier. And so, at the exploration stage, the development stage, you've got to spend the time talking to the community. You can't just go in, find it, do all the drilling, get it all up, do the feasibility, and then go down and sit with the community. You have to, it's a program that starts right at the exploration stage, and so you just have to make sure you've built that, because when we come in to look at the project, we're going to sit down with your local community members. We're gonna get a measure of how well you've done as a company in terms of building that bond with your neighbors.
Okay, what's the earliest you'll get into a company?
Well, that's got to be in a resource. We have to be able to put a framework around what the potential for the mine is. Now, we do have a program called Early Deposit that actually works really well for companies that are not quite to the feasibility yet, but they've got a resource and they're working their way through. They're in progress in terms of getting that feasibility done, and they just because they don't have it's a very challenging time for them to raise capital to move these projects forward. And so this early deposit mechanism allows us to set a framework stream around it. You don't have the same high level of confidence as we do if it was at feasibility level. So it's kind of a little bit looser, but we'll fund up to 10% of the total value in advance of feasibility and permits.
Okay.
That's been very well received, because in today's equity market, most of these companies are trading at 0.2 times net asset value. What most people don't, well, I think more and more people are understanding it now, is that a stream is incredibly attractive to a company that's at that stage, because we're investing into your project based on the value of the metal, not the value of your shares, and we're paying typically 1 times that asset value for that metal. That's way more attractive than what your shares are trading at. Your shares are trading at 0.2 times that asset value. It's just it's incredibly dilutive if you can source equity investors right now. It's incredibly dilutive, and so I think streaming, to be honest, we are the long-term investor, right? This is what the new long-term investor looks like in today's world. And I hate to say it, there's so much shift on the broader investing space towards index funds that we're just not getting the active management, the active investors out there, except for the streaming companies.
Well, it's interesting, but that's literally going to be the next question, probably the final question. I know you've got places to be, but we've seen like people like Appian recently, I think raised $2.2 billion, and I've heard they're potentially going to double that. That's kind of like, that's the traditional route of, equity investors and so forth. But on the other, so I think that will happen, right? There's a metal super cycle coming. There's a new role for gold in this economic environment we find ourselves in, and the EV revolution, all those good things. At the other side of it is you've kind of got these companies which are cash strapped, really struggling to raise affordable capital. So they're coming up with things called alternative financing. Sometimes those things are good because it releases potential, and sometimes they're terminal death spiral type structures because they're just desperate and will take anything. Have you seen anything in this kind of alternative space which might be competitive to streaming?
Not really. What I do constantly see is people trying to modify the streaming business model and shape it and such. Some with success. The one challenge that I have seen is that some of these private equity groups will incorporate an all-in-one bundle that'll have some convertible debt and some equity and the stream/royalty on it. The stream structures typically are those private equity groups aren't long-term investors, and so they don't really care much 5-10 years out, because they have to collapse the fund and move on to the next one, and someone will buy it. They'll just market it and push it out there, right? And so the structures aren't all that. What we've seen is that they're not worth, because of the structures, because of the structural weaknesses that they've sometimes brought in, they're just not worth what a good old Wheaton stream is worth.
Well, I think also
it's got some weakness in it.
Well, the incentives, we're not talking strictly pipes here. We're talking convertibles and all, which themselves have restrictions. But the incentives are different there. If your fund, you're incentivized by the management fee and the carry and not necessarily the long-term success of the company.
That's right.
Right, okay.
When we're investing for the life of the mine. These streams, it's not a liquid market. And in fact, we don't want it to be a liquid market. We want to own these streams for the life of the mine. That's our reserve and resource life is 60 years right now.
Right, okay.
We're long-term investors, true long-term investors. What I find is the PE groups, they're in there for 5 to 10 years, however long their fund timeline is, and then they've got to collapse it and get out. And one way or the other, they're not going to be there for the long term. And ideally, you're in a good enough position to clean that up as it hits your market. But a streamer is going to be there for the long term.
Good man. Good to see you. Thanks for coming in, Randy.
Always enjoy it.
Cheers.